folks. I think I've set everything up now, so hopefully you can hear me and even see my screen, which would be useful. Great stuff. I think we're in business. Okay. Thanks for joining me. As always, monthly webinar where I could try and find some trading opportunities for you and look at any markets that you'd like me to look at. I'll sift through the markets the 20 or so markets that I cover every day for my subscribers. Well, I've got to say there's not an awful lot going on at the moment. I'm hard pushed to find some particularly interesting trading opportunities, unfortunately, but we'll start off with gold. Gold is definitely worth a mention. Obviously, it's been in the news a lot. We've had some big sell-offs. You can see that just from the daily chart here. Obviously, with that big one-day sell-off here, 20th of July. I think that was a Monday when that hit. That big move happened before I'd even woken up, so it was sort of a very early Monday morning. Since then, we've headed sideways, so it is quite an interesting situation. I'm not going to keep flicking backwards and forwards on different time zones, but take it from me that we have got quite a big Fibonacci support level around the 1086 area. If you take the low of $253 in 1999 and you take your Fibonacci levels up to 1920, which was the high in 2011, you'll see clearly for yourself that around the 1087, 1086 area is a good... oh, hang on, someone's saying they can't hear me. Oh, okay. Seems like there is sound, so someone's got a problem hearing me, but I've no idea why. Afraid I can't help you there. Okay, guys. Sorry, I'll carry on while he tries to sort out the issues there. Okay, so yeah, where did I get to? 50% Fib, 1086. So we've had a 50% correction in gold over that significant 12-year rally from 1999 up to 2011. So yeah, in my books, that's pretty significant. Right, let's just have a look where we are on the daily chart then and what this means for gold going forward. I've noticed that there are so many bearish gold predictions that have suddenly hit the market after that big dump on the Monday 2 weeks ago. I remember that when oil was up around $150 a barrel, everyone was absolutely bullish, and when gold was up at 1920, everyone was extremely bullish. Now suddenly it would appear that everyone's got very bearish about gold, having seen it drop 50%, which makes me chuckle a little bit. You can see that so far, obviously we haven't closed today, but so far we've not seen a close below 1086, in fact. So I think that's important. It looks like the lowest close was 1090, according to this little candle down here. Today, obviously, we are trading a little bit lower, trading down at 1085. So there is the risk that we will trade below, whether we will close below 1086 today. We'll just have to see what happens. But right now, we've got this pretty bullish candle here. I think that was Friday, was it? Last Friday, where we spiked down to 1077. Stop hunters seeing if they could push any weak longs around the mid 1080 level out of the market. A nice spike higher. But since then, we haven't seen any follow through. So this is getting a little bit frustrating and a little bit confusing. I'm still not going to get turned bearish on this until we at least see a close below 1085. Preferably a close below 1085, and also obviously a break below 1077 would be quite negative because that would cancel out this quite positive blue candle here. So we are at quite a crucial point in gold. I like the fact that we're severely oversold, and I like the fact that everyone's turning bearish, which does make me wonder whether this is maybe not the absolute bottom, but well, there is every chance that this could be the bottom for gold. It's a very, very important level. That's probably all I need to say now. You get my thinking. Also, if you join up a trend line going back to January 2014 to the low in November 2014, you'll see a really strong trend line there, a really long, which is going back over a year and a half, isn't it? And we're just sort of being supported by that. That comes in also around the mid 1080 level. So there's quite a few reasons to look for that mid 1080 level to be strong support. And it's certainly working so far because, as I say, we haven't had a close below there. In fact, if you apart from this blue candle here, when we spiked down to 1077, which I think, as I say, was which was last Friday, we haven't actually managed to dip below 1086. So I think you get my thinking. Being short right now could be a little bit risky, despite the fact we're in a longer term bear trend. We were looking at the potential inverse head and shoulders pattern, but that's been negated now. I don't think that's going to happen. The question is, do we get a double bottom here at around 1077? That's certainly possible. If we would see another a repeat of one of these nice blue candles here, where you spike down, push up, close near the high of the day, that would signal to me that we've got a double bottom, and especially if we then fail to again close below 1086, that would that double bottom with a closure above 1086 would be another potentially positive signal. So, all right, you can see what I'm thinking. Back above 1100 would be quite positive for gold, and we could start thinking about a recovery. You can see I've got some fib levels on here. 11, 13, 14 is would be the next main targets for us to get through. Obviously, now we start breaking below 1077. That's going to put gold ready for its next leg lower. I'm not going to bother to look at targets now. We can have a look at that next time. But I certainly wouldn't be surprised to see it down at 1030. That wouldn't be much of a problem. If there's any questions on gold, let me know. But I think I've pretty much covered all my thoughts on that right now. There's not much point in going into any shorter-term charts, really. It's just a question of what happens now. We've headed sideways for long enough. I think it's about time we got some sort of move. Although in summer markets, you never quite know, do you? All right, I've got someone asking me about euro US dollar. I need to know your thinking, so I better get onto that one straight away. Unfortunately, there isn't a lot of thinking on the US dollar, and I'll show you why. Let me just try and upload it for you. Can I please comment on the support line? Sure. What support line is that? Are you talking about gold or are you talking about euro US dollar? Gold. Okay. Sorry. What would you like me to comment on? What support line? Don't quite follow your question. I can flick back to gold now, as we were on that subject, but just let me know what your question is, please. Okay, let me go back to gold. I'm sorry, I'm being asked a question. Guys, if you can send your messages to all attendees instead of just to me, then everyone else can see what you're asking and I won't have to kind of repeat your question. So, I don't have any trend lines, support trend lines on my chart, so I'm not quite sure what you're talking about. If you could elaborate, I'd be... Are you talking about the trend line that I mentioned going back from January 2014 to November 2014? Would you like me to show you that trend line? Okay, I'm not really getting an answer out of this, so... Yes, okay, sure. No problem at all. Okay, so let me show you. We've got... let's put it on a weekly chart. There you go. Nice and easy. January 2014 to the low in November 2014. Can you see how clearly how that trend line cuts into where we are now? Weekly basis, of course, we haven't closed anywhere near that. In fact, last week, although we dipped down, we managed a strong recovery from 1077. As I said in my reports, I don't know if any of you follow my gold report, but I said that was probably stop hunters being aware of the fact that the mid 1080 area is a strong support level. So they pushed it through just to see if they could rinse out any weak long positions, which I'm sure they did. But in fact, I stopped out below there, would you believe? But I've managed to jump back into a little long now. It's a tricky one, though. Yeah, the problem is it's 1086 is such a big level, and because it's a level that is important over a 12-year period, 10 points on this is really nothing. And if you follow my report, I actually wrote you really want to have stops below 1070. You've got to give this a wide berth. And you can see, on the daily chart, we've become quite volatile around this area. There's a reason for it. There's a real bull-bear battle going on around the mid-1080 area for obvious reasons. There's, other people have spotted that this is a big level, and that's what's going on. But just to reinforce that support, you've got this trend line here. So it is really worth keeping an eye on. It's Friday tomorrow. I always think weekly closes are more important and worth paying attention to. So watch where we close. A close below 1080 would certainly weaken the argument, of course. And at a close below 1077, which is last week's low, would weaken it even further. But if we can hold above the mid 1080 area on a weekly close tomorrow, I think that would be positive. And of course, we've got this trend line down here, which is around 1086. So closing above 1086 on Friday night would help the bulls into the beginning of August. I hope that answers your question. Let's move on now to move back to the daily chart. And we'll go on to the Euro-US dollar. Right, the problem with the Euro-US dollar is it's going nowhere. One of the main key points of technical analysis is to trade with the trend. Well, trends can be either up, down, or sideways, and unfortunately this is pretty much sideways. If I can just show you how over the last 3 months we've gone nowhere. Okay, there's some negative trends within that, but really down, up, down, didn't really manage to significantly break below the May low, 108.18. Where did we get to in July? 108.08. So, if anything, almost a double bottom, but it's not a double bottom because it's not at the bottom of a bear trend. So really, all you can say is that the Euro-US dollar is going sideways. If you now ask me where are we going to go throughout the rest of summer and into the autumn, I've no idea. There's no trend to follow in particular. We've staged a good recovery this year when we bottomed out in March and bounced up into May. But since then, really is a sideways to slightly lower pattern. But trend analysis-wise, there's really nothing to show where we will go in the future. We've become oversold, we bounced a little bit, but really it's a case of trading the range. And even the range is quite hard to identify. As you can see, even with this trend line here, we spiked above it, we're back below it. It is a muddle. The whole Greece thing, we really didn't, if you looked at this chart, you wouldn't really think that over the last few weeks we've had some major news about the euro with all this going on with the Greece issue. You would have expected some volatility, maybe a plunge down, a bounce up, reaction to the news as it developed, but there's been absolutely nothing really, and I don't think this chart reflects any of the politics that's been going on. So I find it very tricky. Sometimes some markets just don't tell you anything. Right now, I don't think this is telling me anything at all, to be fair. In fact, I don't even think that trend line went anymore, so let's take that off, just blurring up and down. If you want to put some trend lines on this chart, well, we can put one here. You can see that we're trading sort of within that corridor. I put these red trend lines on because these have been quite relevant. Probably should take this one off. We're just so far off that one now. That's not particularly relevant. If you out of that chart, please do let me know. But really, it's tricky to find some decent levels to trade on this. US dollar and GB pairs are looking good for long trades. Well, yeah, they are, and that's an interest rate play, isn't it? The pound, the UK and the US are the two markets in the world where people are speculating about higher interest rates, or Carney's even suggested there will be higher interest rates. So they are being underpinned, those currencies for sure. Although I wouldn't say that the pound looks particularly strong. We'll have a look at it against the Euro US dollar. Okay, so yeah, what can I say? If you're looking for guidance, directional guidance on the Euro US dollar, not a lot going on here. This trend line again isn't particularly well. I'll leave it on. It's not doing too bad a job, but it's not particularly strong. You've got the 100-day moving average here, which is at, I think, 10.30 if I remember correctly. 1020, 1030 is a minor trend line and 100-day moving average resistance, but we seem to be just chopping up and down above this 100-day moving average. So even that is not a huge factor. We've got some trend line resistance up here at 111, sort of 1520, coinciding with the high up here at 111.28. On the downside, well, really, obviously we've got trend line support in the July low down here at the 108.18, 108.08, most 6 area. Really nothing. If you said to me, right, I'm going to give you a free trade on this, what do you want to do? It's just not throwing up any significant signals for me to get excited about. And if you've got better ideas than me, I'd really love to hear them, because maybe I'm missing something and maybe you've seen something I'm not seeing. But when a market is trending sideways, it's trending sideways. And even we're not even getting particularly big moves. I mean, throughout July, we haven't even seen particularly big ranges when you bear in mind all the politics, as I said, that's been going on with the whole Greece issue. So, I am churning out levels on my reports every day. There are some short-term support and resistance levels that are worth paying attention to, but looking beyond a couple of days and into next week, I've absolutely no idea where this is going to go. And unfortunately, you're going to hear that from me quite a lot today, because it's the same with the New Zealand dollar, the Aussie dollar, the Japanese yen. Let's have a look at the British pound. That's been questioned. And then we'll have a look at oil. So cable has been in a decent bull market through spring and into early summer, into July, well, into the middle of June. We just tighten this up a bit so we can go back a little bit further. There we go. Again, really, on the grand scale of things this year, we haven't actually done, have we? We're trading now only just fractionally above February highs, and really this whole pattern isn't anything to get excited about. However, let's try and break it down. Since April, as I say, good recovery. We had been in significant air trade from July 2014, where we peaked after a good run up, a good 1 year run actually from July 13. We lost all of that gain through to January and into April of this year. So it was a real up and down affair over the last 2 years. Rally up, lose all of it over the same period of time. An upside down V really shaped chart. Since then, we've staged a good recovery. We managed to actually recover 50% of that loss from July 2014 down to April 2015. And we topped out there. That also coincided actually with the 200-week moving average. So we were looking for a top there, and that's exactly what happened. No huge surprise. But unfortunately, over the last 3 to 4 weeks, we've really gone nowhere. So July is turning out to be a bit of a boring month as far as direction goes. Actually, if anything, the cable looks slightly more volatile than the euro, would you believe, even though the euro's been certainly a focus. Okay, so over the last 2-3 weeks, really nothing at all going on here. We're just sort of hovering within a, what is that, two point range, is it? Up to 156, just below 157.00, so 156.70, 80, down to 154.65. Yeah, I mean, that's really a 200 pip range that we've been stuck in for 3 weeks now. Pretty boring. So it's a case of trading that range and waiting for the breakout. You can see that every time we've headed up towards the 157.00 area into the high 156 area, we've seen these spikes up and pullbacks. So someone up there is certainly selling it when we head up there. This trend line was doing its job quite nicely, as you can see. Once we broke it, returned, it's acted as resistance. If we get back up there again, if we manage to get up through 157.00 or the low 158.00 area, it looks like it's going to be trend line resistance. So that's going to be a bit of a barrier on the downside. I'm quite liking this low 154.00 area. We've got the 200-day moving average. We've got some fib support there, and we've got a little bit of trend line support down there as well. So, it's just a case of waiting to see which way it breaks, and then whether it'll hold the low 154.00 00 area, or whether it'll hold the low 158 00 area, and obviously a break either up or down through those levels would be would continue the trend in that direction. But again, there's really nothing to get excited about with cable right now. Again, if you were to say to me, "Here's a free trade, what do you want to do?" I haven't got the faintest idea. I guess you've got to stick with a relatively longer term trend going back a few months, which is quite positive. So I certainly wouldn't bet against the bulls. Maybe sooner or later we'll get some trigger from a UK number, or some further speculation about an interest rate rise, which will push it higher. But I try not to guess the fundamentals. There's no point really. I wait for the charts to tell me which way it's likely to go. And right now, okay, yeah, I agree with you. I would lean towards a more positive outlook. You know, if you're putting trend lines on here, you can sort of see some positive trends. There's a little triangle here, really, isn't there? You can just see I'm putting trend lines on here now. The little triangle, but the triangle isn't necessarily within a bull or bear trend, so that's not particularly significant. It really just is a case of watching to see which way it breaks. I'm very vague, but when markets aren't doing much, it's pointless trying to make something out of nothing and create an opportunity when there isn't really one there. So yeah, we'll see if we can have a break above 157.00, and that would certainly be more positive. Okay. Oil. I've been asked to look at oil, so let's have a look at it. Oil's quite interesting. That was one of the other ones apart from gold that I wanted to have a look at. The other markets I follow for the currencies is the dollar yen and the Aussie dollar. If you'd like me to show you the chart, I'd be more than happy to try and talk you through it, but they're not particularly exciting at the moment. Well, the Aussie dollar's in a pretty negative trend, and I think you don't really want to be buying it at the moment. It looks like it's consolidating as we become oversold, but there isn't anything particularly positive. But in the Aussie dollar, look out for 71, sort of 80 area. There is quite significant longer-term support there if you trade the Aussie dollar. Okay, oil. Again, not really doing a huge amount this year. We had a really nice recovery from March till May, went sideways in a really boring market for exactly 2 months, actually, as you can see here. Then we started to sell off. As soon as we hit the 1st of July, we started to sell off again, re-establishing that longer-term bear trend. So that was fairly obvious once we'd broken those May, June lows that would happen. And certainly you can see that this big red candle shows that when we did break that, sellers piled in. Obviously, some stop losses were triggered there. So what now? Well, we had got very oversold. In fact, we were oversold through the whole of July. But if you follow my reports, you'll know that I said, let's just stick with the trend, stay short, wait for a positive signal, despite the fact that we become very oversold short-term and on the daily chart. We got that positive signal now. Let me just get rid of some of these old trend lines here. These are going to confuse the issue. I've been looking at the SEP contract only. This is the continuation contract. Moving averages are telling us nothing. They're just telling us that over the longer term, we're just heading sideways. So again, not the most exciting market, but I did call a low when I saw this nice little positive candle here, the new low at 46.68 in the higher close, beating the day's previous candle. So that told me that it was time to get out of shorts, buying into longs. Happily, we saw the market head higher yesterday, as expected. We're not really getting an awful lot of follow through today, however. So how long this recovery will last, I don't know. We do need to unwind this short-term oversold situation. We are starting to do that. So I would hope that we can see a further recovery at least into the end of this week. But the longer-term situation, the long-term picture rather, isn't that positive. So we are looking for selling opportunities at resistance levels on strength. I'm hoping we can see just a little bit further strength. You can see these stochastics at least look quite positive. We'll need to get above these little levels here around the low $50 area. So we get through sort of 50 to 50 and a half. That would be helpful for bulls. I don't think this is the beginning of a bull run. No, certainly not. I think this is going to offer selling opportunities further down the line into August. But certainly I am looking for a bounce, and we're just getting a small bounce at the moment. As I say, $50 to $50.50 will be the key areas that we're going to have to try and beat. Now, I'm guessing we're going to struggle up there. I don't think the bulls have got a strong control of this market at all. But I've got a small long position on from from yesterday around the 47.5 level. So, you know, we're in the money a little bit on that. It just seems to be stalling today. There doesn't seem to be a lot of movement in anything today, to be fair. Okay, so that's my short-term view on oil. A little bounce, and we'll be looking for some selling opportunities in that. If there's anything else, have I missed anything? Anyone ask me? No. We've done the euro, we've done oil, US dollar. I can look at the dollar index. Right. Ray's talking about the US dollar pairs, so let's have a look at them. Let's have a look at the dollar index. That's probably the easiest way. So yeah, dollar index has been pushing higher over the last 2 or 3 sessions. Reaction to the FOMC, I guess. Focus back on interest rates over there. I haven't had a look at this chart for a while. I don't actually report on this on a daily basis for my subscribers, so I haven't had a look at it for a little while. Let's just take off some of these irrelevant trend lines. Again, on the grand scale of things this year, this has just gone sideways, isn't it? So we're up, down, but in the end, at the end of the day, we haven't really gone anywhere since the beginning of March. So it's sort of the end of March, beginning of April. We're still hovering around there. We're still hovering around May, June highs. There's no particular trend direction on this. Up, down, stuck in a range. If you're going to throw some trend lines on here, you'd be doing something like this. This one's. Well, we dipped below this trend line. I'm going to take that off. I'm not sure I like that one, actually. Put something slightly shorter term on. Okay, so there's not really a whole lot going on this chart to give us any clues to long-term direction. Yeah, you say that the dollar and the cable are strong, but really when you look at them over longer-term periods, they're not really anything, are they? They're not particularly strong. They're not particularly weak. They're just going nowhere. So it's a case of trading the ranges, really. Yes, we're up today. We've bounced nicely off the 100-day moving average, but that hasn't worked particularly well as a level before. You can see it's been chopped about. Okay. What next? Well, yeah, we're in the recovery stage, but we're overbought short term on the dollar index, so I don't really see us tearing away if we can get up through this high here at 96, 60, 65. Well, we've got these May highs up here, which are probably in the back of people's minds around the 97, 70, 80 area, and then of course we've got the July highs just fractioning higher around the 98, 15 area. Again, I can't really get excited about this chart. We are in a short-term bull trend, though, so I suppose we could focus on that and say, well, since the middle of June, as we head into the end of July, we are building a short-term bull trend on that. So yes, I wouldn't want to bet against that. And obviously, we've got support down here around the 96.50 area trend line, bit of longer-term fib action going on down there. So that's a decent support level. Do I expect a Fed rate hike this year? I've absolutely no idea. I wouldn't even bother to try and spend my time guessing what the Fed's going to do. I focus on the technicals. I don't try and guess what the politicians are going to do. I've no idea if they'll do it or when they'll do it. Obviously, it's all data dependent, isn't it? And certainly the US economy doesn't seem to be powering away in the way it should do after a 7 or 8 year recovery with zero interest rates, ridiculous sums of money being printed and pumped into the economy. I've said it before. I'll say it again. I've been trading since 1987, so I've seen quite a lot of ups and downs. Every time there's a down, central banks cut interest rates. That's the general policy. Pump liquidity into the market. It soon recovers. They create another bubble. We all know the story. We've all read the articles that everyone's written about this. We've now, whether we're in a bubble or not right now, well, that's for other people to argue. I think we probably are in certain markets, even non-financial markets. Classic cars and all kinds of things seem to be ramping up at the moment with all the cash that's splashing around. But sooner or later, there will be something to trigger the next financial shock. I'm not saying it'll be a meltdown. And what do they do then? What do they cut? Do they pump? They pump more money in? Do we go negative interest rates? What is the next thing they're going to do to fight off the next problem? I think we need to be seriously worried about it. But yeah, I've got no idea what the Fed's going to do or when they're going to do it. I'll leave that to the Fed watchers and to the economists. I focus on the technicals. Aussie dollar. We do have some direction with the Aussie dollar, so thankfully there is something a little bit more for me to talk about with this one. We haven't been going sideways over the last 3 or 4 months, so I can at least show you a trend. There we go. Scrunch this up a bit. Okay, so let me get some more data on here just so we can go back a little bit further. Actually, it is worth showing you a longer term trend on this. Let's do the weekly. Okay, so this is the weekly chart. You can see basically, oops, it's just reloading. So we have clearly been in quite a negative trend since the middle of 2011. You can see that, well, it was mostly sideways. I suppose the real bear market didn't get going till 2013. So let's widen this out to 2013. Oops. There you go. Most definitely we are in a bear trend, and we have been for, let me see now, what month is this? Okay, so April 2013. Yeah, for over 2 years, this market has been in a decent bear trend. Bit of sideways action going on here for almost a year, actually, and then the bear trend resumed. So, back to the daily chart. Bears well in control of this market. Seeing quite a typical negative trend recently. Certainly since May, down, sideways, down, sideways, down. Now we're going sideways again. We've got very oversold, but we're not getting any real sort of recovery. I can't see anything particularly bullish in the chart. I can't see anything particularly bullish in the longer term chart. So right now, I wouldn't really want to be betting against the bulls. I think the risk is of a break below the July lows around the 72.5 level to push us lower. We have not managed to regain the 200-month moving average is quite significant. That's around the 78.25 area. We didn't manage to get back above there. Let me see now. When was the last time we went? Yeah, that was up here. This June high. That was when we managed to try and retest the 200-month moving average, and we couldn't get through there, and then we collapsed again. So my thinking is, don't bet against the bears just yet. They're well in control of this market. We're seeing a few days of sideways action, but the risk, I think, is to the downside. But we've got a really important support around the 71.85, 71.80 level. That is, if you look at your chart, go back to 2001, put some Fibonacci levels on there. We had a low at 47.73. We had a rally all the way up to 11.08. Hang on. What am I saying here? 110.80. 110.80. So having bottomed out 47.73, we had a big old rally up to 110.80. We topped out there in July, August of 2011, and that was when that was our peak. So if you put some fibs on there, you'll see that we've got 61.8 fib level at 71.80, 85.80. That, I think, will be important. We've also got quite a significant longer-term trend line going on there. I guess I should show you that, really, because you're going to want to see that, aren't you? Let's just go back to the weekly chart. No, let's go to the monthly chart. Question. How does the end of month affect the market, and how should we take that into account? Okay, well, hang on. How am I going to answer that? Yeah, the end of the month obviously is an important factor. I do keep an eye on monthly charts. You should keep an eye on monthly charts. A level on a monthly chart isn't broken, of course, unless you see a close below it, a monthly close below it. Right, now let me just show you something here. Sorry, I'm not going to remove all my short-term fibs and stuff, so it might look slightly confusing, but you can see this trend line down here. So I've got it around 71.40. It's not a million miles away from 71.80 when you consider that 40 pips is nothing on the grand scale of things when we've come down from 110.80 down to 71.80. So we've got sort of this 40 pip support area in the Aussie dollar, and I think that's going to be important. You can see even on the monthly chart, we're really oversold. We're oversold on the weekly chart, we're oversold on the daily chart, so we're oversold all over the place. Bears have got control of this market. Just because they're oversold doesn't mean that it's time to pile in. But you've got to be aware of important support levels when you are significantly oversold and you've had such a big sell-off. So, yeah, it is worth paying attention. 71.80, 71.40 in the Aussie dollar. It would act as a reasonable target on a break below 72.50. It's not a million miles away, so I could easily see us reaching into that 40 pip support band, but it's certainly worth paying attention to. It doesn't look like we're obviously going to close below there or test it in July, so this monthly chart will be important for August. Maybe we can dip down there in August, and just be aware that because it is a big level, you're going to need wide stops on this. You're not talking about a 30 pip stop. You're going to need something significantly wider below 71.00 because especially on the monthly chart, of course, we're going to have to give it a wide berth. But as long as we close in August above 71.40, that would signal that there might be a change and a recovery at least. Maybe not enough to start a full bear trend. We'd have to see some sort of pattern that would indicate that that is the bottom of a bear market. It certainly could happen, but I'd be looking for some more signals on the shorter term charts to indicate that is the case. But if you're short and you've been running shorts for quite a while, I don't think you want to be running shorts any further than 71.80, 71.40 at the moment, and you want to be very aware of that level. So that's really the most important thing I can say about the Aussie dollar at the moment, but certainly wouldn't be surprised to see us break below 72.50 and test that. If we do hold on to 72.50, we have got some short term. Well, it's not really a double bottom, so you can't rule out a base here, but I wouldn't be aggressively buying it unless I saw it into that mid 71 and a half area. This to me doesn't look like anything that's compelling me to get long of this pair here. Nothing at all, really. Yeah, so I don't really understand your question. How does a month end affect the market? Well, end of month, end of quarter, yeah, it's significant. You get some window dressing from traders. I mean, it depends what you're talking about. Stock indexes. I guess that traders will try, and perhaps, or funds might try and hold the market up. If it's the end of the quarter and it's an accounting period, it might try and make their books look better. It depends what market you're talking about. Obviously, there's endless amounts of markets, and I would imagine some of these do have importance and some don't. I mean, I'm not really sure what you're asking me there, but it's a bit of a vague answer, I know. Am I bothered that the Chinese markets are in such bad shape? Okay, it's a fundamental question, and I don't think that the Chinese market is particularly affecting anything that I'm looking at. I don't think we've seen the Aussie have a shakeout, particularly I think the Aussie was already in a negative trend. We haven't seen any spikes lower in the Aussie this week on the back of weak Chinese markets, so I don't think there's a huge correlation there. I saw some headline that people are selling paper gold to cover margin calls in China. Well, yeah, maybe, but gold hasn't exactly broken lower this week, having after that big spike lower last week. So, no, I don't think it's particularly relevant. Chinese market is just exceptionally volatile, but it's fairly isolated, I think, when you compare it to the rest of the world. We did Kiwi. Let's have a look at the Kiwi. We did get apparently a sell-off this week in European and US stock markets on the China thing, but I think sometimes the newspapers make up headlines just to justify certain moves. And I really don't think that was the reason that the European and US stock markets sold off. I think half the time, especially in quiet markets like this, actually, if I've got time, I'll quickly show you the stock market. So the US stock market hasn't gone anywhere all year. We haven't had more than a 5-day trend in the US stock market. So, I mean, there's just nothing going on. Kiwi, is it turning? No, I don't think it is turning. But I better be quick because we're going to have to wrap things up, I think, and I'm going to probably get told to stop in a minute. But 60, there is an important level here. Longer term, I'm not going to bother to show you because it'll take too long, because I would like to show you the US stock market. But hang on, let me get it. 6,400 is an important level to watch in the Kiwi. At the moment, there's no sign of it bottoming out, I don't think. It looks like we're just having a sort of a bear flag situation here, a little correction in a bear trend because we got so oversold. So fairly textbook, really, in the Kiwi. But we haven't been able to break through 66.90, which looks important. We did spike above there yesterday. I'm just noticing that. I didn't look at this yesterday, but you can see that certainly isn't a positive candle. The spike up and the slightly lower close followed by the big red candle. So no, this Kiwi does not look positive at all. Wouldn't be surprised to see a retest of 6,500, but 6,400, didn't I? 6,400, 6,400 is an important level longer term. So do keep an eye on that. Maybe we can have a check that out next time around. Yeah, the S&P, we haven't looked at any stock market, so I'm just going to show you the chart and show you just how boring things are, really. There's just nothing to get excited about. This time last year, there were some really nice little trends that we were jumping on and we were running, and it's just completely different this summer. I really don't think August is worth trading, if I'm honest with you. I think now that the Fed meeting's out the way, we're going to have to wait till September for rates. The whole Greece thing seems to be relatively under control, even though that was pretty damn boring as far as I'm concerned. I just don't see what's going to spark any particular interest in this market. And I shouldn't say that because I should be trying to sell you my services and getting you to subscribe through August. There's no point in lying to you. If the market's rubbish, it's rubbish. We have to wrap up now. Okay, well, look, there's the S&P chart. You can see going back to February, March, we've gone nowhere. What are you supposed to do with that when we've just gone absolutely nowhere? Here, if I widen it out, you can see it for yourself. Okay, thanks, guys. I'll give you my website in case you don't know what it is. I'll give you my email in case you need to talk to me. You know where my Twitter handle is, I'm sure. You've probably seen that. And I just want to let you know that I'm also doing a course which has had some great reviews. So if you're interested, the next one goes in September. It's all on our website, Day Trade Ideas Mentoring Program. There you go. Thank you very much. Hope that was help. Sorry the market's so boring. There's not much I can do about that. But please have a look at my mentoring program. Hopefully and if you've got any questions, just let me know. I can teach you exactly how I look at charts and analyze them. Thanks very much.